Good day. We are having another episode of HJT Views on current affairs. Today, we will speak on the draft red herring prospectus that the LIC of India has filed with SEBI and generally the insurance sector as it has developed and is developing in India. It is good to see that finally the LIC of India has filed a DRHP with the SEBI authorities awaiting their clearance for the public issue to be announced. Sadly, the issue of just 5% of the share capital is a ridiculously low figure. They should have made it at least 25-30% and expanded the market, significantly expanded the capital market. Anyway, be it what it is, the government felt that its needs for funds was satisfied by 5%. And so a very restricted public issue has come out where the minority shareholders won't really have much going in their favor. They will be dictated by the majority shareholder 95%, and we all know who the majority shareholding is with. It is with the government of India. So, one advantage that has come out of this LIC public issue is the fact that LIC has been forced to make public disclosures on its policies, on its investments, on the way it is working, on its costs, on its revenues base, etc. And one can read various articles in the media about comparing LIC with other private insurers. The fact remains that LIC is still the largest single life insurer, but it is every year losing market share. Every year it is losing market share to the other private players who have entered. It needs to really review its performance on new business generation, its performance on premium income. LIC needs to take a stock of its operations and really see where it is that it is steadily losing its business base in the life insurance business sector. One hopes that this issue succeeds. One also hopes that because of disclosures that are now necessary, because of governance covenants that will come in, LIC of India, after going public, does not give some real shocks to the shareholders and to those and the policyholders with whom it is dealing. That would be extremely unfair, and it would be a case of not really highlighting the full truth as when you made the application for the prospectus and went through with the prospectus and the money collection. It would be extremely unjust and unfair if after a year or 18 months LIC comes up with some weird reasons for lack of performance in terms of the fact that this is expected under this and under this requirement and under should have built in everything that was required into the prospectus, the accounting treatment, the covenants, whatever it is, it should all be there. LIC should start on a proper plate with no distinguishing with the other private players. This is so far as LIC of India is concerned. But there is the second matter about why is it that the insurance business has not expanded in India. The banking sector got opened, the telecom sector got opened, the banking sector got opened, and of course, SEBI has been around for significantly longer period of time. All of them have different regulators. There is the TRAI for the telecom sector, there is the RBI for the banking sector, there is IRDAI, Insurance Regulatory and Development Authority of India for the insurance sector. Question that I have is why is insurance not gaining the kind of momentum that the other sectors have gained? What is it lacking? Where is it lacking? What is failing? Why is India such an underexposed insurance market? Why is it that insurance has not spread out in India the way it should have, particularly after the sector got opened in the early 2000s? Is it that IRDAI has not played its role adequately in ensuring that the insurance sector reaches to the Indian consumer and reaches much better? The advantages of insurance are explained, and we have significantly higher insurance coverage. Today, our coverage, at least on the personal insurance front, is pathetic. I'm talking both life insurance and general insurance. Whether it is coverage for health insurance, whether it is coverage for hospitalization, whether it is coverage for accident benefit, whether it is coverage for fire, whether it is coverage for burglary, our coverage in India is extremely poor. And the question that I have is it because we have not generated the kind of policies that would interest the Indian to purchase? Or is it that the Indian is a fatalistic attitude person and therefore is quite willing not to go in with life insurance or life insurance of the amount that he actually should be having, looking at the earnings capacity that he has, or the other general insurances that he should be having? Is he taking a chance? Is he just hoping that things will finally work out and I don't need to pay the insurance premium? What is happening on the insurance space, on the general insurance space in India, that the expansion of the market has not happened the way the telecom sector blew up, the way the capital markets have blown up, the way the banking sector has blown up? Why is the insurance sector lacking? This is a question that the insurance companies and IRDAI have to ask. The question also, of course, is to the ones who take out the insurance, but they will buy it only when they are convinced that they need it. That convincing somewhere or the other has fallen flat. It is not happening. And the insurance companies and IRDAI need to do a lot more to get people interested in insurance. They have not even touched the basic skin of insurance so far as the Indian is concerned. There's a lot more deep that one can go, but it's not happening. And I hope that over a period of time, with LIC of India also corporatized and subject to the same rules as all other insurers, they will see a market in the life insurance business at least and expand it significantly. That ends my talk of today. Have a great day. Till we meet again with the next episode of HJT Views. Jai Hind, Jai Maharashtra, Jai Mumbai. Bye.